You enter a perfect trade setup, confident, then bam, the market reverses. Sound familiar? Banks already knew your move and used it against you. That's where order blocks come in, the secret zones where big players trade. Master them, and you shift from the losing 90% to the winning 10%. Let's dive in. In this video, we will learn what an order block is, how to identify the 3 most high-quality order blocks, and finally, I will teach you 2 strategies on how to trade using order blocks. What is order block? An order block is a special area on a chart where big traders, like banks or institutions, have placed large trades. These trades often cause significant price movements, making these areas easy to spot. If you see the price move sharply from a specific spot, it likely means these big players, often called smart money, are active. For example, when large buy orders are placed, they push the price up quickly, and the area where these trades happen is called an order block. There are 2 types of order blocks: bullish order blocks, which are created by large buy orders that drive the price up, and bearish order blocks, which are formed by large sell orders that push the price down. These areas are important because prices often return to them and bounce back, offering potential trading opportunities. If you had bought at an order block, you might have made a good profit when the price moved in your favor. Many people are facing losses due to not identifying the correct order block. So 3 important rules for a valid order block. These are crucial, as you won't be able to trade the strategy if you don't get these down. Number 1, an order block needs to be unmitigated. Order blocks are generally a one-time use. If the price touches an order block, it's no longer considered valid, meaning it can't be tested or retraced. For example, let's say you spot a gap or inefficiency in the price. So you draw an order block if you see the price, or even just a wick touching that order block. It means the order block is no longer valid because it has now been tested. While there are strategies to reuse a tested order block, I'll cover that later in the video. Just remember that an order block is generally a one-time use. Number 2. For a price movement to be called an order block, there must be a gap in the market. This gap is also called inefficiency or imbalance. These words just mean there is a space where the price didn't fill in properly. Let me give you an example. Imagine 2 price moves that both go up quickly. In the first one, there is a gap between the top of the first candle's wick and the bottom of the third candle's wick. In the second one, there is no gap because the wicks touch or overlap. The first one is a valid order block because it has a gap. To mark this order block, find the first candle before the gap. Then, draw a rectangle around the candle, covering from the top of its wick to the bottom of its wick. Number 3 is the most important. An order block must cause a break of structure or a change of character to be valid. Let's explore how this works with examples. Imagine the price moves upward significantly, creating a gap or inefficiency. This indicates a possible order block, but we cannot confirm it yet. To make it valid, the market must break the previous highs, break of structure, or change its direction, change of character. In the first example, the price hasn't yet broken the previous highs, so we wait. Once the price breaks the high, forming a break of structure, we can draw the order block on the first candle before the gap. In another case, the price forms higher highs and creates a valid bullish order block because it broke the structure and moved upward. If the price starts forming higher highs and higher lows, there could be a possible order block. However, if the price doesn't make higher highs, it's not valid yet. After some time, the price moves down significantly, forming lower lows, a change of character. This signals a market shift to a downtrend and confirms the bearish order block. This shows that when marking order blocks, you must consider both the structure they're formed in and whether they lead to a break of structure or change of character. Now let's see how we can trade on the order block. Strategy number 1. Let me explain liquidity order blocks and how they work. On a 1-hour higher time frame, when the price breaks a higher high, it creates liquidity. This process is called inducement, as it attracts traders to enter the market. After this, the price usually pulls back to sweep the liquidity. At this point, a liquidity sweep happens, and a high probability order block is formed. We can mark this order block as a zone on the chart. However, don't rush to take an entry as soon as the candle touches the zone. Wait for a confirmation on a 5-minute time frame. Look for a bullish engulfing pattern or a structure shift to confirm the trade. Once confirmed, draw a smaller order block on the 5-minute chart, and then take the entry. Place your stop loss slightly below the low of the 5-minute time frame for safety. Set your target at the recent swing high. Strategy number 2. A breaker block is a zone where an order block, which was once strong, gets broken. When this happens, the price often comes back to that area, and it can act as a resistance zone where the price might reverse again. This makes it a good place to look for short trades. However, breaker blocks usually work only once, as their strength fades after the price retests them. For example, imagine the price moves up strongly, leaving behind a gap, and makes higher highs. You mark the order block on the chart at that point. Later, the price falls and breaks through the order block, creating a new low. This tells us the trend has changed from bullish to bearish. When the price returns to the broken order block, that area becomes a resistance zone. This is a good spot to take a short trade. Place your stop loss just above the breaker block and set your target to be twice the size of the stop loss. In this case, the price rejected the breaker block, hit the target, and gave a nice profit. Thank you for watching.